and thank you for joining me in my market report. My name is Mike, and this market report is about mortgage rates. We go into what's impacting them on a daily basis. We go into what the trends, if they're going up or down, if they're impact, and what's impacting them on those daily basis. We don't get into a rate quote primarily because there's too many variables that go into a rate quote, and this video would be very long if we did it. There's also different loan programs, so each loan program will have a little bit different rate attached to it as well. A little bit about myself is I am a loan officer. I do work with the national lender. So if you need that rate quote, please feel free to reach out. We can certainly assist you with that. We do help people with, we can answer questions regards to mortgage programs that's available out there. We can, if you get questions about the process, or if you look at questions about refinance or purchase and need that pre-approval to buy your next property, we're here to help you as well. So please feel free to reach out at any time. So without further ado, we'll jump right into it. We'll start off with the economic reports. Today we don't happen to have any, primarily because today was deemed a national holiday recently, and that will be the Juneteenth. So even though it's a national holiday, the markets are still open. We just don't have any economic data to report today. So we'll jump over to the headline news. And right now, stocks are way down today. There's a couple reasons for this. We got the quadruple witching, which basically is on options and futures from single stocks and and stuff that they basically come to an expiration date. So this is a time when essentially at the end, towards the end of the quarter, when big hedge fund companies will go ahead and reposition their portfolios. So we're seeing a lot of movement right now. Right now we're seeing a lot of selling in this process. So we got partly, it could be part of this, but we also had some comments by Fred Bullard, who is a Fed member out of St. Louis. He's not a voting member this year. However, next year he will be a voting member. And he was on CNBC earlier this morning and came in with a lot more hawkish tone in terms of what the Fed's doing. So that kind of scared investors a bit. He feels that maybe they could even raise rates as soon as next year. So with that information, the markets didn't reacted kind of in a negative way and kind of went the opposite direction. So let's see how this is playing out in the bond market and what's going on with the rates today. We started off the day much higher, as you can see here, or not much higher, but at least a few basis points higher. However, for about 5 minutes there, we dropped way down here, about 20 basis points or 25 basis points, and then and basically in about the same time frame, it came right back. So it's kind of a weird morning that we had that kind of a quick drop and show that kind of volatility, that much of a drop, and then come right back again. Right now we're at same level as where we closed yesterday, about 30 so mortgage rates are unchanged. Now, pricing's gonna be a little weird. Some people kind of didn't really price in the big change we had the other day on Wednesday. So pricing looked better, and then some people came out with a little worse pricing today than yesterday, especially if they priced in down here. And we did see a couple of price changes for both directions. One came in, I saw one come in higher, and one came in improved, and another one worsened. So it depends when the lender came out with their rate sheets. But in generally speaking, our rates should be very similar to what we saw at yesterday's close here as well. Let's look over at the yields. It's the same thing. That yield spiked way up here, touched off the 100-day moving average, pulled back, and now we're actually testing this floor of support here, which has been very strong. We haven't really been able to stay above here. As you saw, we here for a day we worked it the second day, but which was Thursday and Friday, and then that Monday came right back and touched right at the 100-day moving average. 100-day moving average has been pretty strong for us as well. As you see for the 2 days that broke above it, came right back the next day underneath it, and we've been kind of staying underneath the 100-day moving average for about 2 weeks here now, or almost a week and a half, we'll say. So the Treasury yields have been a lot more volatility. We're just under 4 point, or about 1.46, 1.46 right now. And again, we're at pre-COVID levels right now. But MBS hasn't reacted as much as the Treasuries have. So they're moving a bit more slower, and we're getting a little bit more of a margin between the two, the 10-year Treasury as well as MBS, which is mortgage rates. So we're not getting as much of a favorable outcome on the mortgage-backed securities as fast as what we're seeing in the Treasuries. So it's been moving a little bit more slow. But mortgage rates, I'm going to say again, should be relatively unchanged from what we saw yesterday, yesterday's close. All right, folks. Hopefully that makes sense. I hope you guys have a great rest of your day. Enjoy your weekend. We'll see you in Monday's video. If you guys enjoyed these videos, I greatly appreciate if you could smash that like button. It will certainly help us out. And we'll again, look forward to see you guys on Mondays. And thanks for watching. Bye-bye.